Good morning and welcome to this morning's half-year review update webinar. This morning will be hosted by Corporate Development Manager Lyndon Sproul, who will be presenting a short presentation before answering a number of questions which have been received during the week. There will be an opportunity to ask questions throughout the webinar, and if we have time at the end, I'll put those questions to Polymetals and Lyndon. Without further ado, I'll hand over to Lyndon and his team to walk through the webinar.
Good morning all, and thank you for joining us today. My name is David Sproul, Chairman of Polymetals. I'd like to introduce you to our team here. We're speaking to you from the Endeavour Mine site today. Across the room is my co-director, Jess Oram, and Jess will discuss all things exploration, and certainly we'll able to answer questions in that regard. Lyndon, to my left, whom Gareth introduced, is our corporate manager. Lyndon will speak through the presentation, which was released earlier. I'm sorry it was doubled up. There were some amendments that didn't get through on the first version that was lodged with ASX. Across from me is our General Manager, Brad Stanmore. Brad is based here on site, as is Jess and Lyndon, on a permanent basis, and Brad can speak to you with respect to operational issues. On the call also is our fellow director, Alistair Barton. Welcome, Alistair, and also our CFO and COSEC, John Haley. So I'll hand it over to Lyndon, and we can walk you through where we're at, where we've been, and where we're at with the project at this point in time.
Yeah, I was just confirming you can see that presentation on screen.
Yes, I can see the presentation.
No worries. Thanks all for joining us today. This year, we've been very busy with the business. We haven't attended any conferences this year, nor do we expect to attend any this year. So we thought, given we've had a busy 6 months and we've got a busy 6 months ahead, we would do a webinar. Hence the reason why we're here today. The focus of this is just to touch on the previous 6 months, as well as what we're doing at the moment and where we see ourselves moving over the next 6, 12 months and beyond. This one's pretty self-explanatory. The last 12 months has been especially busy. We obviously acquired the Endeavour Mine last year, redeveloped it, got it into first cash flows in July, and we achieved our first quarter of free cash flow in the June quarter. So plenty more to go. We always knew what this opportunity was for the business. We've had our challenges to get there, but certainly 2026 has been a defining year for the business. So in terms of the June quarter, you can see the momentum that we're getting, also helped by metal prices, but we're certainly getting on our feet here at Endeavour after the last 12 months. We increased our revenue up 65% compared to the March quarter. We're continuing to maintain some momentum on that front. Production profile is fairly good at the moment. We're looking to expand that, obviously. We're looking to process more tonnes over the next 6 to 12 months. And our cash was up and debt down. The priorities for us at the moment is to pay down our debt and continue to fund our exploration. The results that we released initially in June and then July really highlight the resource opportunity and what Endeavour is. We're starting to unlock the value that still remains on this project. Just a quick one on touching on the DSO. We transitioned to DSO earlier this year. There was a number of reasons why we did that, but the main one was capturing the precious metal at the time. So through our standard flotation process at Endeavour, we produce differential float. So we float the silver and lead first and then float the zinc afterwards. And we produce two products, a silver lead concentrate and a zinc concentrate. However, we don't recover gold through this process or any meaningful payable gold. In the upper levels of the upper north lobe, we had some substantial gold, and kind of the metrics that we look at and the optionality that we have with DSO is if the material is generally above 500 grams silver and above 1 gram gold, we do have the option to DSO that product. That was the right decision we made earlier this year. However, as we're moving down in the sequence, it's kind of falling below those parameters, and we're moving back to standard flotation. So it's not an issue. We've got the capacity and the infrastructure to do it, but we do have the option to selectively DSO parts of this ore body. There is some of the examples of that in the upper main lode drilling as well. You might have seen the picture of some of the core that we put in our recent announcements, and we will continue to monitor whether we DSO or float through the plant. Just a picture of some of our stockpiles last a couple of months ago. For us, the focus has been the upper levels. The upper levels of the Endeavour mine contains higher grade silver, lesser so base metals. For us, this project is all about silver, although we do have good credits from zinc and lead as well. Just gives some scale there. Under the current mine plan, we're looking to recover and have payable 2 million ounces of silver over the next 12 months. So where's that coming from? We've got ongoing production from the high grade upper north lode. That's going well. We're currently mining in the 10100 level here at the moment. We're backfilling stopes. We'll be backfilling one of our stopes shortly and then moving forward and taking more material. We're aiming to get around 20,000 tonnes continuously out of this area per month over the next 18 months. The other area which will be the focus is the upper main lode, which we've been drilling out. That we're looking to bring that online through the work that we're doing over the next 12 months. So the upper main lode, you can see the schematic, the long section of the mine here. How this came about is in 1996, there was a mine subsidence that happened. That was due to not backfilling stopes in the early days. They were taking very, very large stopes and not putting in sufficient ground support. When that happened, they took a surface projection of the subsidence and then projected that down some 500-600 meters and basically sterilised that area from further mining. CBH, the vendors of this project, put a couple of holes into this prior to placing the project on care and maintenance in 2020, highlighted that there was a remaining in situ ore. We followed that up, obviously, with the current drilling campaign in the upper main lode. And what we found is that this area, which was previously sterilised by the subsidence, actually, a lot of it remains intact. There's significant volume there as well, and quite consistent, broad intercepts of high-grade silver, lead, zinc with some gold and copper credits. You can see here on the long section, the area we're targeting. Again, on the plan section, we'll give you a bit more information. You can have a look at those assay results. They're certainly very thick, very consistent throughout the whole program. We're currently drilling hole 37 at the moment. I think we've got plans up to 39. We may drill some more to further define. But we are currently modelling this resource, and we should have the results from that out within the next couple of months. After we do that, we are currently also working on an updated reserve, an updated mine plan, which will allow us to be in a position to then provide guidance to the market. We've come a long way since putting out our initial mine plan in 2024, and a lot has changed, some for the better. So we'll come out with that later in the year and then be in a position to provide guidance to the market. As well, given the success we've had with what you would refer to as very limited drilling in the upper main lode. In the main lode, we're looking in a number of areas, certainly out to the northwestern area as well, where the underground drill rig will likely move after we complete the program in the upper main lode. We need to do a bit more drilling in some areas of the main lode, and hopefully we can get outcomes like we've seen in the upper main lode. Likewise, the DZL, the deep zinc lode down here, very high grade, coarse grain zinc ore body down the bottom. We've completed designs there. There was an amount of dewatering that needed to happen. We're there now, and we're proceeding with that. So development on the deep zinc lode will likely commence later this year. The ore body down here remains open to the north-south and at depth. We have an exploration drive planned in this area, and we need to drill it out further to certainly define the extent of it, but also infill some of it for detailed mine planning and development. So before I hand over to Jess, we have been doing a lot of exploration over the last 2 years, although we haven't had that many announcements on it. We have drilled over 30,000 metres at an average 50 metres a day. It's about 2 years of continuous drilling. So we've had a drill rig spinning continuously on surface over the last 2 years. We're currently drilling some quite interesting gravity anomalies out to the east of Endeavour. And once we're finished there, we'll move, probably do another hole there and then move the rig regionally. I'll hand over now to Jess to discuss our regional exploration.
Polymetals is committed to growth, and exploration is a major component of that endeavour. Part of the growth story is coming from the in-mine work that Linda's been talking about, the lease work that you saw with that gravity target, but also as we step out into the region. This is an image of the exploration licenses that are held by Polymetals, and you can see all the prospects. The prospects defined historically from the 80s and 90s work of Tasmanco, Illura, EZ, and many others. CBH a little bit, but close towards Endeavour. These prospects we have been mapping and sampling and doing some electrical geophysics work through the winter. That's mostly in induced polarisation work. And this is work to define the targets even more strongly. And we've identified 4 targets that we want to drill straight away. So as soon as we can get a rig released from the mining lease, take it out to number 4 tank. You can see that in the central part of the area there. Boundary tank, Furnace tank, and Kiri. They're all various commodity targets from gold, copper, lead, and zinc. And with the body of work that we've collected over the winter, with the IP and with the understanding from the historic work, there's 4 beautiful targets ready for drilling, which we will drill soon.
Just touch on where we are as a business. We get asked this question quite a lot, so I thought we would come out publicly and show what our strategy is. Polymetals, our skill set is in precious and base metals. Obviously, we would like to get some diversification there. As a business, we would like to be an acquirer rather than an acquiree. We would preferably be in Australia, although we are not opposed to going overseas, but we are looking at how do we get to production operations for the business over the medium term. We're also very focused on exploration and investing heavily in our exploration. So we've just got an additional exploration license granted to the north, predominantly a gold prospect, and we're looking also for inorganic opportunities, silver, zinc, copper, gold.
I might add that this site has a very large processing footprint. There is a great deal of optionality within the process circuit footprint. So we are looking at opportunities. Most on the call will be aware of our work that we have been doing on the tailings. There is nothing certain about that at this point in time. However, we're looking forward to being in a position to modify the mill to cater for a new discovery and development into the future. This project, from a logistics perspective, offers grid power. It offers rail infrastructure, road infrastructure, and of course water. So it's a great location, very large footprint, a great deal of optionality, and as our production people, we intend to take full advantage of those opportunities as they come along.
I think Dave's answered the first one here, which is we do have the foundation, and now we're producing. We've demonstrated we can produce and develop projects. Over the next 2 to 5 years, we've got high-grade silver coming from the upper north lode and also the upper main lode. And we're continuing to progress our pathways to extend life, both through the DZL and main lode itself. For the project, we're focused on consistent production, trying to increase the tonnes to the mill. Obviously, the mill can do 1.2 million tonnes per annum. It hasn't run at that level for the last 2 decades. The mine has always been mine constrained. However, increased tonnes obviously is to our benefit. We're continuing our underground drilling, which has been really successful. We have a number of areas throughout the main ore body itself where that drill rig can move to next. So I see ourselves with the rig underground drilling indefinitely. For us, initially, we are continuing to fund exploration. We're ramping that up at the moment. We've done a lot of work. We've done a lot of the preliminary work, regionally mapping, validating targets, IP programs, sampling, in the near mine environment, understanding the geology and understanding structures that are within the near mine environment, as well as in mine, which we're getting the success initially from drilling the upper main lode. So we've got two rigs turning at the moment. Hopefully we can expand that. And just lastly, we as a business, we're now ready and looking for growth opportunities. We're assessing inorganic growth opportunities as well as the number of opportunities that remain within the Endeavour footprint.
Look, I might say filling the mill is an interesting question. Filling the mill from a throughput perspective can be achieved by development of the deep sink lode. So the full definition of that deep sink lode to understand its geology and orientation is something we're in the process of doing. However, for us, it's all about metal units being put through the mill. So presently, we're processing about 70 tonnes per hour of high-grade material through the mill. So metal unit production is on par with if we were processing at full mill capacity a lower grade material. So it's what the mill can handle, so we just need to be very mindful of how we approach that and what material and what blends of feed we put through the mill to ensure that we get the most out of it. But as I said earlier, it is a very large mill. It sits on a very large footprint with a great deal of optionality to approach it in various ways to optimise our production and revenues.
Thanks, Gareth. We'll hand over for questions now.
Thanks very much for that informative webinar. Please forgive me for not introducing the wider team earlier. It's not a case of being rude. My eyes are failing me as I get older, but no, great to see you all. I spent a week there earlier in the year and found everyone very accommodating and certainly was impressed by the spirit of the team and what it takes to get the performances that you achieve each quarter. Without further ado, I'll progress to the questions. Just a quick reminder that the presentation will be recorded and shared on the website as well as socials. And any questions we don't get to today will be attended to after the webinar. All questions will be answered. Okay, you may have crossed some of the ground or the questions that you may have answered some of the questions that are here, but it won't hurt to go back over some of that ground to reinforce some of the messages that we're communicating today. So first question, is filling the mill still in your mid to longer term game plan? And has POL's plan to eventually process tailings changed? Further to that, what is the expected ramp up trajectory for the second half of the year? And what are the primary underground bottlenecks to reaching full mill capacity?
That's a big question. I'll seek to answer it. Look, many and varied is probably the best answer, but look, Polymetals is intending to ramp up with metal unit production from the mill. We explained the approach with the deep sink load in terms of throughput. The deep sink load nominally has about a 7% zinc grade, and it is a very coarse-grained zinc mineral known as sphalerite, high metallurgical recovery. A full definition of that is ongoing. The bottlenecks in the mine really are access to remaining stopes in the main lode, access to and maximising output from the upper north lode. This is not easy ground to mine. We hasten slowly and ensure that we get it right such that we don't lose access. So they're really the three areas. And of course, the full delineation of the resources and reserves available to us from the upper main lode that is the subject of recent drilling. We believe that area will generate several years of high-grade feed to the mill. But that is being defined, modelled and defined as we speak. So we will announce publicly how we're proceeding with that in due course. But that's taking shape and auguring very well for the future of high silver output from this operation. And look, one of the bottlenecks on this operation, and it is not distinct, similar across the Cobar Basin, is the availability of people. People are a constraint, and for us, that's probably the largest constraint that we face. How do we attract people? We have recently shared 5% of the project profits generated from this project with our staff equally across the board. We have some 217 full-time staff at this point in time, I believe. So it's all about the retention. Really, is we pay commercial rates in line with the other mines in the district. We seek to be an employer of choice, and the fact that people are now sharing in the spoils of this business, we need to demonstrate to them and help educate them how optimising the business can work from their perspective. So it's one of education and the fact that they feel part of the family and part of owners of the business. We've also embarked on a share scheme for the senior management team here, and most of those senior managers understand the potential growth of those shares that they are generating. They are tenure-based shares, which is one of the key attributes that we're seizing on here on this project. So it's not easy. People aren't easy in today's world, but we're developing a team here who have a sense of ownership and a sense of what's needed to optimise this business.
Next question, only early in Q3, but how is Q3 tracking, and what recoveries will be expected on the Upper North Lode going forward?
The quarter at the moment is tracking well, in line certainly with last quarter. We're obviously hoping to improve quarter on quarter. In terms of recoveries of the UNL ore through the mill, the high-grade silver, you would expect lower recoveries than what you would get generally from the main lode. That's because of the higher silver content and where it's deporting in terms of its mineralogy. In terms of the lead and zinc, it would be in line with our recoveries that we're getting from the main lode itself.
Okay, next question, a double-barreled question, and look, we may look to answer that more fully after the webinar in writing. But now that the Upper North Lode ore processing trial commenced in early July, what are the preliminary metallurgical recovery rates and gold-silver payabilities compared to shipping raw DSO? And what net margin differential are you seeing between milling the Upper North Lode ore versus the shipping the raw direct shipping ore?
Look, as Lyndon mentioned earlier, all the ore mined from the Endeavour deposit contains an amount of gold. There is definitely an upward bias in gold grade toward the shallower material, Upper North Lode and Main Lode material. With a differential float producing a silver, lead and a zinc concentrates, the gold is predominantly held within the pyrite matrix. Now, pyrite is one of the main gangue materials or waste materials that we find in our ore. So it's producing saleable concentrates means the removal or displacement of that pyrite material. And of course, the gold predominantly moves with that pyrite material. So from a processing point of view, the higher the gold grade, right, the fact that you're not recovering that gold in a saleable form and rejecting it to the pyrite phase, that pushes us across to selling it as a direct shipping or DSO material. And that really is the determinant with respect to whether it goes out as DSO or whether it's processed through the mill. So where we're presented with discrete opportunity to exploit high-grade material or gold material, so long as the silver concentration is above approximately 300 grams per tonne, we're tending to push that toward DSO. Anything below that threshold generally is slated to go through the mill. So that's how we look at it.
And just to add on to that, in terms of the net margin difference, certainly at the current silver prices, material below 300 grams per tonne is much more economic to process through the mill.
And the reason for that, of course, is because when you're shipping DSO, the mass becomes a financial consideration because you're shipping more weight. And of course, it costs the same to ship a tonne of concentrate as it does a tonne of ore as DSO.
Has your conceptual view of the potential scale of the upper main lode changed materially since the program began? And are we talking hundreds of thousands, a million, or potentially several million tonnes?
Look, you want to answer that, Jess?
I can answer that. We're drilling in an area which is material that was outside the mineral resource estimate when we first started, the mining resource study. This material is new to our understanding because it was thought lost or sterilised. We can't answer the question directly because we haven't done the work about how big it is. That will start. It started now, but we'll start in earnest when the drilling is completed. So we still have another 6 or 7 or 8 holes to go in that program, and we'll be presenting those results to the market as we have them.
Just to add to that, Gareth,
yep.
I think we're happy with how it's turned out so far.
Yep. Certainly, certainly some tailwinds go a long way in the mining game, and it's good to have them. If we are lucky and the upper main lode and the deep zinc lode perform successfully and silver remains strong, what could Endeavour realistically look like in terms of mine life and annual production 3 to 5 years from now?
It's a good question. Yeah.
Look, in mine exploration, we have the western mineralisation. So the northern pods, if you will have seen the long section on the presentation, the northern pods are yet to be closed off. There is work to be done there. So there's an unknown amount of mineralisation that may or may not be available there. We've yet to fully quantify the upper main lode remaining material. Depending on throughput and metallurgy, that will determine the time it takes to mine that. We have yet to close off the full dimensions of the deep zinc lode. It needs to be drilled out, and we're confident that we can mine that and fill the mill. So look, at this point in time, there's a great deal of unknowns. I'd be very, very surprised if the mine life currently is less than 5 years at this stage. And depending on near mine and regional exploration success, it could add quite substantially to that, and of course add other commodities. If we're successful in our regional exploration, then it's quite likely that we might add a gold, copper, gold, zinc, or silver, lead, zinc deposit, reserve, mine, who knows, into the future. All that is long term. It's pie in the sky in many ways right now. We've got to drill those holes and get that going. So, we've been endeavouring to, pardon the pun, approach our exploration more aggressively, but we've been organically funding that exploration in large part whilst we develop an exploration team. So there's a lot of moving parts with respect to increasing our momentum and not misplacing shareholder funds in doing it. So we are hastening slowly. The attributes of this project are huge with respect to exploration potential and extended project life. And that is our main game right now. Our focus is to extend the life and extend a long-term and profitable company with a view to distributing a proportion of those profits to shareholders as we move along.
I'll answer that a little bit differently, Gareth. Endeavour was discovered and developed on a 20 million tonne resource. Over its 38 years prior to Polymetals ownership, 32 million tonnes had been mined. What we know to date is that Endeavour today, what we know is defined as a 50 million tonne resource because we've still got 16 million tonnes of remaining mineral resources.
And I'll qualify that a little bit more. A lot of the remaining resources are in fact part of partially mined stopes. So there is a large portion of those resources that may very well never see reserve status because of the fact that they are partially mined stopes and they may or may not be available to us. So resource reserve conversion is one of our focuses here in the main ore body itself.
Well, that will transition away from production questions. That was the final one. We're moving on to some economic questions. What is your strategy with regards to the direct shipping ore silver sales? And will management extract and hold the high grade silver if the silver price falls, say below $60 an ounce again?
I think we've probably defined what the DSO priorities are to us. Above 300 grams, ideally above 500 grams silver, and above 1 grams gold. So we will just continue to keep that as an option. And if we've got material that is defined in that category, then we'll look at our options to do so. In terms of holding silver, this business is very long silver. We have, 44 million ounces of silver in our mineral resource. I can't think of the number in our reserve currently, but we wouldn't look to hold on silver. We're a production business. We're here to produce metal and sell that.
Are there any challenges with rail or road haulage or port capacity that would prevent you from, reaching your production benchmarks?
That has been a bit of a challenge to us. We've got over that hump now. Obviously, for those that don't know, we road freight our concentrate in containers to Broken Hill. It's then put on the rail and taken to Berth 29 in Adelaide, and then exported out in bulk. So companies that use Berth 29, BHP, Broken Hill Metals, Hillgrove with the Kentman 2 project, and some mineral sands producers. So we often transship with those people, but we have been doing mainly 5,000 tonne parcels. We have done 10,000 tonne parcels, but we're currently working on a 20,000 tonne DSO parcel, which will sail mid next month. We've got a vessel that's sailing in 4 days' time, which is a 10,000 tonne parcel. So it was for a while. We've worked through that with Cube, our logistics provider, and it shouldn't be an issue moving forward.
The effect of the global squeeze on diesel, how do you see that playing out with regard to your with regard to your operations, and have you got any sort of counteractive measures in place to address that?
Yeah, look, that's an easy one. We're using only a tad over 5,000 litres of diesel per day, and at this point in time. And one of our significant shareholders is New South Wales' largest regional fuel distributor. So we are top priority for that company. We see no reason to think that we would be constrained with fuel supply.
Another economic question. Following the 29% debt reduction to 10.7 million and cash climbing to 29.1 million as of June, what is the management's priority for excess cash generated in the second half of the year?
Pay down our debt, make sure we have got no more debt. Obviously, we've been amortising that over the last 12 months anyway. We're on track to be debt-free probably in October, hopefully. And then ramping up our exploration. It would be the first step.
And our final question, which is generally the question that every company who's generating cash gets asked along the way, is what is the dividend policy of Polymetals going forward?
As yet, we haven't settled on a policy. When we get to a significant free cash flow situation, we can consider that. But I mentioned earlier that our aim will be to distribute dividends to shareholders, balanced distribution of dividends to make sure that we get the most out of this project in terms of life and profitability into the future. So once we're in that position, the market will know what our dividend policy strategy will be.
All right, that concludes our webinar. I'm happy to bring the webinar to a close. As I said, any questions, please feel free to send those through to me. My name, Gareth Quinn, is at the bottom of every Polymetals release, and I'm here to get your questions answered. But thank you for everyone's participation today, from the Polymetals executive and those who have the many people who I can see have signed up for today's webinar. All right, thank you very much.
Just you, Gareth.
In closing, Gareth, one
Yes.
thing I will say for the people is, if you have any questions at any time, my email, Gareth's email, is at the bottom of every single ASX release. Our job, part of our jobs, is investor relations. So please do send us emails. I'll jump on a call with you. We do get back in contact with you. We like building relationships with our owners and fellow shareholders. So any questions anytime, feel free to email us. Thank you.
All right, thank you.
Thank you, Gareth.
Cheers.